Alrighty. Let's check out this strategy. Multiple time charts, and we're going to use multiple accounts. What we're doing is entering in a trade, one trade per account. If that account hits its daily loss limit, then we don't add to it. We don't dollar cost average. We just end that account, and it was a loss in that one account. But the second account triggers in another area at a deeper and better price, a more discounted price. And we take the trade in a second account. And then we can do that with 3 accounts out of the 5 paid accounts that we have with Apex. This strategy is pretty good when it comes to a direction that you're pretty confident in. So we are pretty confident that gold is going bullish right now. And we've got the day chart right here, and it looks really strong. And it's above yesterday's close. And it already closed the gap, which is great. So that's good news. And now it's pushing back up over the high of yesterday, which is very bullish, very bullish. You don't get more bullish than that. So we are looking to enter long, but we need some discounted prices. If it just keeps going straight up, it's very hard to jump in. But that would be our first trade and our entry point. Sometimes we do that. And I don't know what I'm going to do with that today. I don't know if I'm just going to try that out. But if I were to, this is an example of a $250 or $300 risk limit on each account. And what we have here is if I were to just jump in right here on this account, then I would have to make sure that my stop loss is no more than, say, $250, $300. And right now that's at a $441 stop loss for 1 micro. So I know that I want to enter in if it comes down here and sweeps the overnight low. So I have to have one of these 3 accounts ready to buy at this level. So the question is, and what I like to do is once one account in and gets triggered out, I immediately want to get into another account. So I've got to make sure that the stop loss area and the entry area for the second account are at a reasonable structure, at a reasonable Fibonacci golden zone or something. I don't just want to blindly do it. It's got to have, it's got to make sense. So if this was all the way down here at a close to, let's say 500 would be 2 different accounts. So somewhere in the middle here, and I think that's a 50% pullback right there. That would be the second account. The third account would be down here after it sweeps. And I'd want that to sweep and come back up. That would be the goal because we do believe it's going to stay bullish. If it doesn't, the worst case scenario, you take a daily loss limit in all 3 accounts. You still have the 2 other accounts you're not trading with. So you're limiting your risk very, very much in all the accounts. And you got a plan. You've got certain, so the setups that we use are Fibonacci, trendline breaks, moving average directions, mostly those 3. Let me do a Fibonacci from the bottom of the overnight low all the way up to where it's at right now. You can see right here, let's do a little box. You can see right here, this is the golden zone of that area. And what is the loss limit for that? Let me go ahead and see if I were to enter in up here. There you go. Now you can see right here, here's the entry green box. If I were to enter in right up here at the high, here's the stop loss right in the golden zone. And you're like, well, why would you want to get out where the buy is going to probably take place? Well, that's where my second trade is going to trigger in if this one were to fall down. That's a $281 loss. And then from here to here would be another stop loss level around $250, $300. And that would be my third entry after the overnight low is swept. And then if we just have one of those days that just goes straight down, then you have your loss. You take your loss. You can't avoid that. If you have a middle finger day, spikes up, it comes straight back down, leaving a pintail. We all have traded and lost in days like that. This strategy is not foolproof and guaranteed to work. All I'm saying is I get a couple of extra tries, and I'm not putting all my chips in one account, hoping that everything goes right and then be done for the day. I got 3 tries here to get it right on a day that's already bullish, above yesterday's close, pushing above previous day's high. Everything's going good. This is MGC, the micro for gold. So if I'm wrong, I'm wrong. But I think it's a good plan. So that's what we're going to do here, waiting for the bell to open, and I will let you know how things go as soon as the bell opens. I let it pull back a good bit here from where it was. Now we're only risking a little under $200. And I'm looking forward to my stop losses in place. And I'm ready to, let's get it back up to 250 where I need it right there. Okay, so if it sweeps, I got my second account right here ready to go. If it sweeps this level, if it comes down past all this and hits this level here, and it'll stop me out and trigger me into my second one. Here's the overnight low, which is a lot closer now. And there's a Fibonacci zone down here. So now I can stretch that stop loss down into that area there for the third entry. And we should be okay for some of these accounts to make it. Now, I might just play the range today. If I get $100, take it off. I don't know if that's smart or not, because if the market goes straight up, then I'm going to be missing out. I hope that makes sense. Our next order is on another account right up here, which is 2 ticks above the stop loss, which is down here. So this will trigger in 2 ticks before we're stopped out. We want to make sure that we're in the second position right before this gets stopped out. What you don't want to have happen is you get stopped out and you don't get into your other position, and then it goes right back up immediately, and then you're out of a position. You don't have any open position. So, okay, let's see what happens here. So far, it's going up. And this was about a 78.6 Fibonacci retracement here. The moving averages are all expanding up, and it was just dipped down real quick. Now, at any point, I can go to break even on this. I can take whatever profits I want, and I can keep kind of seeing if it's going to come back down a little bit more. I can take profits whenever I want. I'm still learning on this, practicing this, and so I'll let you know how it goes. I hope it all makes sense. Okay, here's what we got. My first trade is set right here. We got in on this dip down, and then now it's going back up. Thank you, God. But my stop loss in that area is, here's yesterday's close. Sometimes price, as it did over in the overnight session, likes to come down and to the close, and it closed it already. So that's a good sign that it doesn't need to do that. But our transition is, for the second account, is down here after this first stop loss. Then we get triggered into our second trade right here near this dotted line, which is the close of yesterday, in case it wants to come back down and test the overnight low and all this business. Okay. If it were to keep going down and testing the overnight low on the third account, let me show you the third account over here. This is the last and final account. If it sweeps down further, we are set to buy after it sweeps the overnight low in this golden zone. Fibonacci golden zone, we're set to buy with our stop loss down here. If it keeps going and consolidating and pushing, we're obviously going to get out of the trade. We don't keep holding a losing trade. We're not going to add to a losing trade or dollar cost average with this strategy in multiple accounts. There's no need to do that. So it's a great idea, in my opinion, if you like to, enter in at better prices. Okay, I'll show you what happens. Okay, I'd like to get 1-to-1 on this. But I think I'm going to go to break even. But it's a little too close to price, because, even with this last pivot that it formed, that my break even is up here. So, you could see this coming back down 50% of that. It's too close for comfort. I'd love to go on break even. I've done this before, when you go to break even and you just wish that you would have kept it, right where you left it. I'd like to see it hit at least 1-to-1 target, which are these pivot levels at the high here at the top. So we'll see what happens. Okay, I took it off. I don't know if that was smart or stupid. It did not hit target. We got an earnings report coming out, and the way I look at it, if it drops about 20, 30 points, I can get back in it. It could be dumb, and I need to work on that. I'm not going to lie. It's one of my weaknesses. It's a really critical issue with me, because it's the difference between me paying my bills and being successful and really just being an average, break-even trader. So I understand that if I don't hold these winners and hold my winners, then I'm probably not going to be successful at trading. So it's very in the forefront of my mind that I understand that this is critical. But as this I got out right here, as this earnings or whatever's coming out, there's a report coming out, comes back down, I would be willing to get back in it anywhere down through here. So we'll see what happens. If it keeps going without me, I'm going to be upset though. Well, as price is pulling down, I'm hoping that it gets into this Fibonacci zone here, or if it were to spike down on this news, I'd be looking to get back long, even close to this pivot level here. We got in, this is our entry down here. We've already exited way up here for $200 profit. So anywhere in this area, if it comes down, I would like to get back in it. So we'll see in a few minutes when the news hits. Okay, I don't know if this is smart or not. It just spiked down into that zone and I just got right back in it. Oh, and the news is not out yet, so I just didn't want to miss that opportunity down in there. Well, the same plan still exists. We have about $100 cushion, so we'll see what happens. Well, it went down further. I wish I would have waited to get in after the news. It spiked down and it's bouncing right here, as you can see, but I don't know what Fibonacci level that is. I didn't have that particular pivot measured. Let's take a look at it. Yeah, right in the golden zone, as you can see, from this pivot here where we entered up to the high where I sold, came down right just close to that 78.6, but I hope it continues to go up. I don't want to have a loss, but we'll see what happens. Okay, we're getting a bounce. Thank God for that. And anything back up to where I got out will be extra for this trade, giving me a more one-to-one return rather than getting out early, which is what I did. So that was a little nerve-wracking, but it's working out pretty good so far. If you have the direction right, this strategy is really, really good. If you get a red candle middle finger wick reversal day out of nowhere, you can get hit all three accounts. So keep that in mind. All strategies have a weakness. No strategy is perfect. And I think the thing with Apex and others is that we're being sensible, reasonable, and intelligent with our risk management. And I think this strategy is proving that it does just that. What I like is technically that we're coming out of a consolidation correction from, let's say, the 15-minute chart here. Moving averages got real tight, and now you're starting to see where it looks like it's wanting to expand again, where they start to just shoot up in expansion. That's a really good sign. Doesn't mean it's going to work. It just means that technically what we're seeing right now, especially on this 500 tick chart, you can see it starting to develop real tight moving averages right here. And then now we're seeing an expansion of the moving averages. That's what I like to see, an expansion like that. So hopefully it will keep shooting up with momentum. Okay, silver hit $100 right on the button, starting to come back down. So I did take my profits right back up here in the same area. I wish I did a little bit higher. Right here in the same area that I did before. But I think, I'm going to wait and see what happens. Maybe we'll get another pullback. Maybe it'll go without me. But now that I'm up almost $300, well, I wish I would have got more out of that. Only 230 right now at the moment. So the question is just staying in the trade or not staying in the trade, and not worrying about reports and just relying on structure, and don't worry about the correlation between silver and gold. And it looks like it's holding pretty good there. Yeah, so I don't know if I'm going to get back in it or not, but this is the style we're trading today. You're just seeing the one entry here. I might pause the video and just see what happens the rest of the day and make the video a little longer. We'll see. There was a little bit of a debate about what's more important, the direction of the market or your timing to enter the trades. And it seemed like I was one of the minorities that said the direction's the most important, because if you don't have the direction right, timing is useless. What are you going to time? Where to put your stop loss and actually lose if you're in the wrong direction? So and I'm not saying I'm good at that, but today it looks like we do have the right direction. Thank you. But the second trade that we entered in, I don't know if I recorded this part or not. What I did was I got back, I closed out my one trade for the $229 profit, and I just entered the second trade without it coming down to stop me out. So I guess that's a alternative way to do it. Take your profit on the one, see if you can add profit to the second one. So when it got up here to the top, I re-entered on the second trade, closed the first trade out again up here. So we got long down here, closed, got long right here on the pullback, closed again. So the first trade is done. Then I said, if it's going to keep going, let me get in on the second account with the second trade, see if we can make money in the second account. This was annoying, the pullback, but here we are back up. And I'm just trying to think, should I just take my profit and be happy? Again, this is the battle. How long do you stay in? But it really looks like it wants to go over the high of the day, at least go back. It's so close, But I just wanted to, put that part in the video. And let's see what happens, I guess. I don't really want to take a loss on this account, so it's like very tempting to just take the profit now. So, but can I hold it? The worst case scenario, and I'll end the day, is I break even. So that's the worst case scenario. In other words, if price comes all the way back down to here and stops me out, it'll wipe out the profits from the first trade, and you put all the accounts together, it would be a break even day. So we'll see what happens. It's so excruciating waiting. It's almost at the high of the day, and I just got out. I gotta work on that, but we're done for the day. Oh man, if I could just hold it. I had a trade last week or a couple days ago that if I would have held it, I would have got 3x return, which would have been $750 on the trade instead of the $250 risk reward that I do. But so here's where we're at. It's limited because of my failure to hold. I think it's going to keep going up. I really do. Okay, here's trade 2. I should have stayed in longer. It poked up over the top of all-time highs. I could have spiked out. I could have sold it as it spiked up, or trailed by candle. I probably would have got out somewhere up here, and another $100. Gosh, I just need to be able to hold it longer. Anyway, that's it. I hope you guys are enjoying the videos. Like, subscribe, leave a comment, click the bell. I'll see you next time. Peace.